Hey, Dan. Thanks for taking my call. Thank you for your ministry. I really enjoy your show, and reason why I called. I'm 55 years old, and I'm looking at, and I know you're not a fan of these, but I figured I'd ask you anyway. It's an FIG Annuities and Life. It's a flexible premium fixed index deferred annuity, and just wanted your advice about it. And
yeah.
Like I know you're not a fan of annuities at all, so.
Yeah. Well, I mean, just keep this in mind. You're going to lose liquidity for a number of years, so you're not going to be able to get to the money. You're deferring. Is it IRA money or?
Yes, sir.
No?
Yes, sir. It's IRA. Yes, it is. It's IRA money. Mm-hmm.
Okay, so, you're probably, it's the key word is variable and flexible. So I don't want you to think that it is something that they're guarantee you an interest rate and that's what you're going to get.
Okay.
So it's every bit as much tied to the market as anything else. So I always tell people this, and maybe you've never heard it, but and 99% of the time from the people I hear back, they say, yeah, you were right. They wouldn't do it. But I would just say, if you think, and you may not be in this camp, but if you think that it is guaranteed, if you think that, hey, I'm going to put $20,000 in and they're going to give me worst case scenario, they're going to give me 2%. If the market is down or everything's down, I'm still going to get 2%. And you think that your new principal going into the following year is going to be 10,000 plus 2%. And then the worst case scenario again is that's going to earn 2%, like a CD.
Right.
It's not that way. And it's not going to happen like that. So if you earn 2%, their fees are probably going to be 4%. So, I remember a lady calling me once and said she put $100,000 in a fixed annuity and she loves it. She doesn't worry about it. She doesn't think about it. But she's thinking about, now that it's expired, moving it out. I said, well, how much is it? She said $83,000. I said, well,
wow.
Have you taken withdrawals? And she said, no. And I said, well, tell me why you love it. You could have done better in a money market account. You'd still have your 100,000 plus a few pennies. I mean, you lost money. Do you know that you lost money? So I don't have a problem with the product, because all products, even bad ones in general, have a use for somebody, But I'm old fashioned. I think if you want an investment, you should go to an investment, not an insurance company. If you want insurance, don't go to an investment company and get their product. And don't go to a brokerage and get a banking checking account. It's an insurance product. There are a lot of fees. There is no way ever, ever, ever that the mutual funds inside of that account will outperform you putting the exact same amount of money in those mutual funds directly. You'll always do better by doing that. Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.